It's the final Business Week show of 2023. And the big question I have for you today is this: how would you sum up 2023 in 2 words? Good morning. It's another power-packed episode of Business Week where you'll get to catch up on all the big business markets and economic stories of the past week. Today, we take a look at the future of tech and the future of work heading into 2024 with some experts. If you couldn't keep up during the week, I'm here to help you catch up as always. I'm Rola K. As always, we're going to start with a look at global energy commodities. It's been a very interesting year this year for Brent crude. How did we end trading on the last trading day of the year 2023? Brent was up. However, for the entire year, Brent has actually been down, one of its lowest year-end levels since 2020. We've had the Israel-Palestine crisis. We've had the disruptions in the Red Sea. We've had the OPEC troubles and challenges, but still managing to stay above the $70 per barrel mark. WTI crude in North America, despite the supply gluts there, we've also seen WTI end the last day of trading for the year up 18 basis points. Natural gas, not so bullish end to trading for natural gas. It was down by 1.06%. And of course, RBOB gasoline also up by 90 basis points. Let's take a look at global commodities, global equities markets actually. Starting with the Nigeria Stock Exchange. Now, the NSI, the all-share index, is up this year by 45%. It ended on a bullish note on the last day of trading on the NGX there, 36 basis points up to end with 74,773.77 points. If you recall, in January this year, the all-share index started with 51,000 points, and market cap rose throughout the course of the year by 148 billion to end at 40.9 trillion. One of the star performers on the Nigeria Stock Exchange this year was, of course, Transcorp, seeing a gain of over 1,000%. And of course, some very bullish moves there as well by insurance stocks, banking stocks, modest trading values and volumes at 12.82 billion naira. But it's not only Nigeria that's seeing activity in equities. Let's take a look at Europe and North America. Well, Euro Stoxx 600 and all the major European indices ended the last day of trading in 2023, all on a bullish note, all up here, perhaps driven by positive sentiments that central banks have slowed their pace of rate rises. The Euro Stoxx 600 was up 23 basis points. London FTSE All-Share Index up 14 basis points. DAX in Germany, CAC Paris, and IBEX in Spain all up as well around the 30 basis points mark. Scooting over to the North American market in Wall Street, let's see what's happening on Wall Street. Perhaps a completely opposite picture there on Wall Street. Well, NASDAQ, if my Wall Street figures will pop on the screen there we go. Yes, Wall Street is on screen. Ended the year trading on a very bearish note. The Dow Jones was down 16 basis points. S&P was down 38 basis points, and NASDAQ 100 tech stocks was also down, but I'll be talking a bit more about that. So don't be deceived, because the last day of trading for NASDAQ does not necessarily reflect how that index has performed throughout the year. And I'll talk a bit about that in my top business picks for the last week of trading. Let's see what my top business picks are. Well, the first story here is a very interesting one, because apparently River LNG, a Nigerian-based LNG company, is going to finalize a gas supply deal to South Africa in 2024. The CEO, David Ige, who was a former executive at NNPC, did mention that there is a growing regional gas market. So Nigeria could be supplying gas to South Africa from 2027. Now, South Africa doesn't yet have facilities to receive imported LNG, so those deliveries won't start till 2027. But the deal, the supply contract, should be finalized in 2024. As we know, of course, in South Africa, Eskom, the state utility, has been dealing with a whole heap of challenges in 2023. So good news there for the South Africans receiving gas supplies from Nigeria. Let's hope there's also light at the end of the tunnel for gas supplies in the Nigerian market due to our past situation, but that's a story for another day. NASDAQ 100 set for the best year since the dot-com bubble. Now, the NASDAQ, which essentially hosts the big tech stocks, the Magnificent Seven. You've got Alphabet, you've got Microsoft, you've got Nvidia, You've got Meta, you've got Tesla, you've got Google. Those are the big tech stocks. It's witnessed its best performance since the dot-com bubble, about $7 trillion gains on the NASDAQ 100. That's the tech stocks. And actually, a lot of the driver for this has been the growth and the hype around artificial intelligence. Now, a lot of that hype has been priced in already in 2023, so maybe 2024, those stocks may not perform as well. But we're going to be talking a bit about tech later, so we'll examine some of the dynamics behind that. But interesting times there for the NASDAQ index. L'Oreal Cosmetic heiress Bettencourt Meyers becomes the world's richest woman with a net worth of over $100 billion. Of course, L'Oreal was founded in 1909 by her grandfather, following in the long line of French luxury design corporations. Of course, we have Hermès, which is one of Europe's biggest wealthy families, and of course, the Wattenheimer brothers who own Chanel. So Myers here becomes the richest woman and the 12th richest on a list that is predominantly dominated by men. Of course, Elon Musk of Tesla leading that charge on that list. Congrats to her there. Like to see a lot more of what's going to happen in the luxury market in Europe, particularly in 2024. Washington, the US, is saying it would like to impose restrictions on about $300 billion worth of Russian assets. Now, this is part of the plan that the US has proposed to the G7 members, but the EU, Italy, Germany, France are a bit reluctant to move ahead with such stringent restrictions. And of course, Russia has threatened to retaliate if the US moves ahead with that plan. Italy, incidentally, is going to be taking over the G7 presidency in 2024 and may have a thing or two to say about the US move. But the US obviously wanting to clamp down further on Russia in light of Russia-Ukraine, which has been charging now for the last 2 years. And my final top pick of 2023 is Chinese smartphone manufacturer Xiaomi has unveiled its first electric vehicle. Now, this is a major boon for users of the Xiaomi smartphones because this new electric vehicle called the SU7 is going to be compatible with the smartphone application. So if you're a user of the smartphone and you buy one of these vehicles, which are also meant to be a bit cheaper than your Tesla EVs or your Porsche EVs, then you're able to integrate all your apps and functionalities across both your vehicle and your smartphone. Now, the Xiaomi has been saying that it's going to get into the EV market, wanting to break into the market share currently dominated by Tesla and others. Tesla has about 9% there, but it's pushing very aggressively on this electric vehicle manufacturing. So big news there coming out of the Chinese EV market. That's it for my top picks. Well, let's now take you to some of the other top stories for the week. First, British billionaire Sir Jim Ratcliffe has agreed to buy a 25% stake in Manchester United for about $1.3 billion. That's about £1 billion. Ratcliffe's Ineos Group will take control of football operations at Man U. The 71-year-old will also provide $300 million for future investment into the club's Old Trafford Stadium. The announcement comes 13 months after the club's owners, the Glazer family, stated they were considering selling to explore strategic alternatives. The American family bought the club for $790 million in 2005, so that's a whopping valuation from that value back then. The only other publicly declared bidder, Qatari banker Sheikh Jassim bin Hamad Al Thani, withdrew his offer to buy 100% of the club in October. United have struggled on the pitch this season and have not won the Premier League since 2013, while they have continual protests against the Glazer ownership. Israel's government has agreed to give Intel Corporation a $3.2 billion grant for a new $25 billion chip plant it plans to build in southern Israel, both sides have said. The news on Tuesday comes as Israel remains locked in an intense war on the Gaza Strip, which has killed close to 21,000 Palestinians since October 7 and ushered global calls to boycott Israel and companies that benefit from its occupation of Palestinian lands. Israel's deal with Intel is a big show of support by a major US company and a generous offer by the Israeli government at a time when Washington, which is Israel's biggest supporter, has increased pressure on Tel Aviv to take further steps to minimize civilian casualties in Gaza. American daily newspaper The New York Times has sued two tech companies, Microsoft and OpenAI, over claims of copyright infringement. Filed at a federal district court in Manhattan, New York, on Wednesday. The suit claims that OpenAI, the creators of popular chatbot ChatGPT, had used several articles from the newspaper to train the AI service without due authorization, the New York Times reports. Microsoft is listed as a defendant as it is one of the biggest investors for the AI company. Already, the software maker has invested over $10 billion in OpenAI. The suit accused the defendants of seeking to free ride on the Times' massive investment in its journalism by using it to build substitutive products without permission or payment. According to the court documents, ChatGPT would sometimes produce verbatim excerpts from New York Times articles when it was asked about current events in the world. Deal making sank below $3 trillion for the first time in a decade in 2023 as a cocktail of higher interest rates and escalating geopolitical tension confounded bankers' hopes that last year's lull was a one-off. About $2.9 trillion worth of transactions were struck globally this year, data from the London Stock Exchange Group shows, down 17% from 2022. It was the first time since 2008 to 2009 that the value of deals announced fell more than 10% for 2 consecutive years, according to the London Stock Exchange Group. 2023 has clearly been a very slow year, more subdued than we expected when you look at the volume of deals, said Simona Malera, global co-head of the Alternative Capital Group at UBS. Europe showed the sharpest drop, down 28% annually, while the Asia-Pacific region was 25% lower and the US 6%. The world's largest traditional entertainment companies face a reckoning in 2024 after losing more than $5 billion in the past year from the streaming services they built to compete with Netflix. Beyond their streaming losses, the traditional media groups are facing a weak advertising market, declining television revenues, and higher production costs following the Hollywood strikes. Disney, Warner Brothers Discovery, Comcast, and Paramount are facing increasing pressure to scale back production and slash costs, following billions in losses from their digital platforms. In Nigeria, we take a look at what came in during the week from all the news. The $2.5 billion of the total $3.3 billion cash for crude swap deal between Afrexim and the NNPC has been received. Independent sources within the oil industry confirmed to Arise News on Friday that the deal, initiated weeks ago by Afrexim Bank with Vitol Energy, Guyana, Sahara Energy, Oanja, and other energy traders, has materialized. The second tranche of $1.05 billion cash payment for Nigeria is scheduled for the first week of January 2024. British American Tobacco Nigeria has entered into a consent order with Nigeria's Federal Competition and Consumer Protection Commission to the tune of $110 million for a penalty. The FCCPC disclosed this in a release on Wednesday, saying it was a resolution of an investigation over a broad range of anti-competitive conduct, including abuse of dominance, seeking to frustrate competitors, penalize retailers for providing equal platforms for product display of competitors, product introduction in violation of regulations, amongst others, and infringement of public health control regulations by British American Tobacco. Well, that's it for the markets and business update.